Please give a warm welcome to the President and CEO of Lending Club, Scott Sanborn.
All right, hi everybody. Thank you for sticking around to make this your last session of the day. I am excited to be here to talk to everybody about a couple of things. One is where we have been at Lending Club and where we are going, both as Lending Club and an industry, after I get through my safe harbor statement. So I'm going to go back almost 10 years. Lending Club was founded with a fairly straightforward idea based on the question, why is it that somebody who is getting paid less than 1% on their savings that they're putting into a bank, paying that same financial institution an interest rate of 17% on their credit cards? There has to be a better way to do this. And the business was launched with the idea of connecting people who had money to people who needed money, so that both could benefit. Borrowers could get lower rates, investors could earn a return on that loan that they were making. Seems like a great idea. You can imagine the parade ensued. It did not. There are a lot of serious questions when this business started. To name a few, how can this thing scale? Can you really grow a meaningful business by matching individual investors to individual borrowers and doing it at the same time and at the same rate? What about the loan performance? Do you really know how to make these loans as you're getting started? Remember 2007, we were essentially launching into the greatest recession since the Depression, when other lenders were actually pulling out of the markets. The third was regulatory risk. Can this thing even exist? Are these loans you're selling? Are they investment securities? And how should you be regulated? And the fourth is, aren't there already a bunch of very sophisticated banks doing this? Wells Fargo is in the space, and USAA is in the space, and they're all doing this. How could you possibly compete? So fast forward on that to today. And last year, Lending Club originated over $8 billion in loans, making us the largest provider of personal loans in the country. And stronger still, together with a number of our peers, marketplace lenders and other tech-enabled non-bank lenders, accounted for a quarter of all personal loans in the country. So really massive progress. So, the answer of can this scale, the answer is yes. And so what drove that? The first was really value, and that is on the borrower side of the house, we are able to save customers using a branchless, tech-enabled process. We're able to save customers money, drive down the cost of the loan. On average, we're saving them about 35% versus their traditional alternatives, which means in the first year of an average loan, we're saving them $1,000. And the second piece of that is the experience. We're able to instantly deliver an offer, no impact to credit score, and deliver money in as little as a day, but in general in a few days with very limited friction on the part of the borrower. And on the flip side, on the investor side of the house, we've paid out over $2 billion in interest and delivered average returns to investors of between 5% and 8%. So the asset has really delivered. And what's interesting is as the platform has grown, we've added to that initial base of individual retail investors that were funding borrowers. And as we've grown that, we've added other layers. We've added higher net worth individuals, asset managers, and notably banks to participate in the overall lending marketplace. So it's not just Lending Club that's been able to deliver these kinds of values. There's a lot of our peers that have done something similar. SoFi in the student loan space is saving their average student loan refinancer over $17,000 On Deck has managed to serve businesses that were not being served by the traditional finance system and has issued over $5 billion in loans. And Lending Club in our small business program is serving minority borrowers at twice the average national rate. So delivering value, reaching underserved consumers is really happening across the industry. And now tying it back to that question of won't you be crushed by banks? You're competing with banks. I think the answer is we've seen incredible examples of partnerships. So I indicated that for us, about a little over a third of our funding in the first quarter of this year, so funding for loans, came from our bank partners. And we've also seen the growth of partnerships between traditional banks and online players. So JP Morgan Chase is working with On Deck to serve their small business borrowers, Regions working with Avant to offer personal loans to their borrowers, and Lending Club has supported Citi in meeting their CRA obligations. So a lot of interesting examples of where the two businesses and the two types of businesses can work well together, taking the low cost of capital and the reach of the customers that the banks have and the low cost of operations and the technology-enabled processes that Lending Club and our peers bring. So it's a question of, it's all downhill from here, right? Not the case. I think there are still real questions facing the industry. I think two of the more prominent ones worth talking about are the regulatory framework and readiness for a downturn. How will these businesses perform in a cycle? So taking the first one, I would say I have been incredibly encouraged and enthused by what I see in Washington as a desire to enable responsible lending and to provide the right framework for making it possible. So I am kind of long-term bullish on our ability to engage there. And in terms of downturn readiness, I think the question is, how will these businesses perform? That's a question for any business that is offering credit. How are they going to perform in a downturn? I think in our case, we weathered the first recession, as I indicated, quite well. And I think what's critical there is making sure you are getting ready. We, Lending Club, has for over 2 years now really been pivoting part of our internal resources to build up tools, training, processes so that our servicing operation is as strong as our origination part of our operation. So in my view, these are real questions, but I think they have real answers. And I hope to be standing here in a few years talking about how the industry has managed through those. So I remain very bullish about the future, and the reason is that consumers are asking for it. In a survey of millennials, 70% of them said that they expect their bank would offer an online application, but in today's world, only 30% of the banks actually do that, which is why it's probably no surprise that 73% of these millennials said they would be very interested in receiving a financial product from Google or Square or Amazon, because those are brands that are able to meet their needs. So I think consumers are asking more from their partners. And I think we've seen it in multiple industries where technology is able to deepen access, improve the experience, lower costs. We've seen it in multiple industries, and I think we're in the process of watching how that plays out within the banking industry. So for me, it's really a question of, what does the horizon look like for our space? These markets are massive in the United States. Lending Club has been participating in unsecured consumer lending, specifically in personal loans. It's an $80 billion market today, set inside a $1.1 trillion unsecured consumer credit class. And you have student lending, mortgages, and something that I am very excited to be talking about today, which is auto. So Lending Club announced this morning that we were entering the auto refinance market. We opened up today in California, and I'm going to show you a little video about what it's all about.
So, you spent hours researching and looking for the perfect car. But when it came time to decide on a loan for your vehicle, you may have paid more than you should have. We don't think that's fair. Welcome to Lending Club Auto Refinance, where you could get a better rate and put money back in your pocket. In less than 1 minute, you could see the loan options you qualify for with no impact to your credit score. The process is easy. You provide some basic information, and our secure platform does the rest. No need to have your loan details in front of you. You're instantly presented with a clear picture of all your options. See how much you could save while comparing to your existing loan. Simply pick what works best for you. And then all we'll need is a few supporting documents that can easily be submitted from your phone. Then sign your loan documents. That's it. Let the savings begin. Lending Club Auto Refinance. Simple, quick, and transparent. Giving you the savings you deserve.
So why am I so excited about this? Talking about the space, it is a $1 trillion market. That's how much is outstanding to consumers right now. 80% of that debt is on loans that were issued through the dealers. And as a subset of that, there is about, last year alone, $283 billion that was issued through used car dealers. And that's the first place that we're going to be targeting. The average interest rate in 2015 on used cars was 8.78. And I think the question is, does that reflect the average risk to the consumer? Because the interest rate and the risk should theoretically go together. And the answer is it's actually made up of two things. One is the base APR, which that consumer would qualify for. And the second is a markup that is put on top of that to add to the cost of that credit. And that markup, it is estimated, has resulted in consumers paying as much as $25 billion in interest, excess interest, above what they qualify for. So that's really what we're targeting. And you ask yourself, how does that happen? How could that possibly be? Well, if any of you have shopped for a car recently, you would know you spend time, you research the car you want to buy, you go to multiple lots, you do some test drives, you find the one you love, and this is the hard part, you negotiate on the price, you finally get there. This is typically 3 hours in to your time at the dealer, and then you get brought to the back room and you meet with the finance and insurance person, and they're entering a bunch of data into a screen, and you don't see what they're entering, you don't see what they see, you're tired, you're probably hungry, you want to get out of there in your new F-150. And so people who spend all this time deciding on what vehicle they want and even researching the price may not be pushing on the price of their financing and end up overpaying. So that's what we're targeting, is this value. We think we can deliver real savings here. About $1,350 would be what we're targeting per loan. To put that in context for most Americans, that's a year's worth of free gas that we can save them, or it's 2 sets of tires. So it's real savings. For most people, this is the second largest purchase that they will make after their home. So very significant savings on a really big purchase. The other thing we're able to deliver is a great experience. So consumers may not know that they have this option available to them. People know they can refinance their house, and they think about that, but they might not think about the car. If they do think about the car, this is what they're going to get confronted with. I mean, how many people in here know your current loan policy number and your payoff amount down to the last decimal point, or the VIN number on your car? This is all information you'd have to go get and research on a typical application. Well, we've got a lot of data connections going on in the background that really, really make this much easier. With basic information that people know off of the top of their head, they can apply in less than a minute, see what they qualify for, immediately compare it to their existing loan. I don't know if you could see that in the video, but here's your current loan. It's going to be over in 46 months. Here's this loan. We can also have it end in 46 months. So like for like, what are you savings on your payment? What are you saving on your payment? And what are you saving in total interest? You can do it online. In most states, the ones that don't require a wet signature, you can e-sign it online as well. You don't have to go to the dealer. You don't have to go to a financial institution. We will take care of paying off your original lender and taking the title over. And there's no application fees, origination fees, prepayment penalties, or anything like that. So a really amazing experience. And on the investor side, what we're able to provide is a really stable asset. This is a view into loan defaults. It's comparing auto to mortgages through the last recession. And mortgages is that yellow one that's up on top. So this is an asset that's shown itself to be very resilient because people want to stay in their cars. So that's very attractive for investors. So attractive that right now, last year, there was about $100 billion worth of auto asset-backed securitizations. It was almost half of the ABS market was auto asset-backed securitizations. So there's real investor demand for this. It's delivering our expectations are a return around 3% for this secured asset, and we think it's a great part of an overall fixed income investor's portfolio. And the last piece is that it's a massive market. I mentioned the trillion outstanding, $283 billion for that used car loans that are sold through used car dealers is what we're immediately going after. Currently, last year, only about $40 billion of that was refinanced. And so I would liken this to when Lending Club stepped into the personal loan space. It was roughly a quarter of where it is today, and a lot of people just didn't know they had the option of, hey, I can actually pay off my credit card and do this instead. It's a fixed rate product, lower interest product, and we've helped create awareness around that, and we're looking forward to doing the same thing in auto. So taking it back to the beginning, the three things that we're aiming to deliver: value, ease, and fairness. We've built our platform to do that across personal loans, patient finance, and small business. We're super excited to be adding auto to that today. And again, I look forward in the coming years to come back and talk about additional products we bring to the mix. So it's my view that this industry is just getting started, and thank you all for having me here today.